Hello, everybody. This is Andrew Keel from Keel Team Real Estate Investments. And today I'm going to show you the top 10 reasons I think you should invest in self-storage. We've been investing into mobile home parks for around 5 years now, and that business is doing great. We plan on continuing our acquisitions of value-add mobile home communities. But in addition to that, we are getting started investing into self-storage facilities. We've spent quite a bit of time learning about this asset class, and it's been amazing to discover the similarities that self-storage has to mobile home parks from an investment standpoint. Here are my top 10 reasons you should consider investing. Number one is it has recession-resistant characteristics, just like mobile home parks. Storage is recession-resistant. When times are tough, people downsize, and this means less space for their stuff. NOI growth in parks and in self-storage has consistently outperformed over the last 20 years. Also, during each of the last 4 recessions, occupancy rates in self-storage facilities mainly stayed flat or slightly increased, while other asset classes had falling occupancy numbers. Reason number 2, the self-storage asset class is highly fragmented. Just like mobile home parks, there are still many mom and pop owners leaving meat on the bone when they sell NOI-wise. They're not professional management companies running these properties as efficiently as they could be. Self-Storage Almanac found that as recently as 2017, 76% of self-storage facilities were still owned by smaller operators, meaning they only owned 1 or 2 facilities. In 2019, this number went down to 73%. So change is happening, but slowly. Reason number 3, self-storage facilities are easy to manage remotely. Technology is drastically helping this asset class as new software, kiosks, entry gates, surveillance systems, and remote sign-ins can reduce the need for property management and even some on-site visits. Reason number 4, the non-payment process gives landlords a lot of leverage. I'm sure you've all seen storage wars. There is typically a lien and auction process used instead of an eviction, like in mobile home parks, that could, very well take a couple of months to get done. Also, it is legal in most states for storage owners to lock out tenants due to non-payment with the electronic gate out front of the facility. Reason number 5, storage can offer a good return on investment to investors. Obviously, that's why we're getting into this stuff, is for the cash flow and for the returns. Self-storage has been outperforming retail, office, apartment, and industrial spaces since 2009. And from 2009 to 2018, self-storage facilities averaged an annual ROI of around 16%. Storage provides large income potential and low operating expense ratios, just like mobile home parks. Also, there are huge tax benefits given the high amount of depreciation possible in these commercial assets. Moving on to number 6, storage has great financing options. Just like mobile home parks, except it doesn't have the agency lenders. But the SBA, the Small Business Association, offers some great loan programs, including the SBA 504 for the development of a new facility and the SBA 7A for existing facilities. SBA loans typically only require around 10 to 15% down payments. They also will include working capital and capital improvement costs into the loan. Banks are willing to offer these great terms on self-storage facilities because storage, similar to mobile home parks, has one of the lowest default rates, loan default rates out of all commercial real estate. Moving on to number 7, storage has many large institutional owners that are willing to pay a premium for a stabilized portfolio, giving investors a great option upon exit. Reason number 8, the month-to-month tenancy allows for rent increases sooner. Small $5 to $10 rent increases on a percentage basis are quite large, but few tenants move out because of only $10 a month. Number 9, storage has experienced an increase in demand as millennials prefer to rent and baby boomers are downsizing from bigger houses. Only 32% of millennials own a home by the age of 34. The millennial generation enjoys the conveniences, comfort, flexibility, and amenities that come with apartment living. They are also fond of having expensive toys, just like, ATVs, jet skis, and surfboards, which will require storage. Millennials are more likely to search storage units near me on Google compared to any other generation. Reason number 10, and this is a big difference from mobile home parks that I'm really fond of. There is a fast turnaround time to make ready a vacant unit. It literally can take around 15 minutes. The low CapEx expenses upon turnover is a major positive difference from mobile home parks, where you could need to put in new carpet, new toilets, pay utility costs, etc., to turn a new unit, turn a unit once it goes vacant. But in storage, just sweeping it out and spraying some grease on the doors, and it's ready to be rented again. A few additional reasons, expansion opportunities are easier to get through zoning compared to mobile home parks because the stigma isn't present. Also, the large number of units diversifies your risk because the chances are low of a large number of tenants moving out at one time. Also, the typical storage facilities, typically storage facilities only need around 60% occupancy to break even. So a couple additional units for you there, but overall, we still love mobile home parks, but we're very excited about diversifying into this new asset class that has many complementary aspects. If you're interested in investing into self-storage syndications, please contact us to be added to our self-storage specific investor list. As always, thank you for your trust and thanks for watching.